I'm Sandi Siegel, president of ME Day, and welcome to another episode of Talking Trade.
And I'm Ian Coxhead at University of Wisconsin-Madison. And today we're very fortunate to have with us Drew Slocum. Drew is the Senior Vice President and Marketing Manager at Bank of America, where he leads a team of bankers in global commercial banking activities, supporting businesses across the state. So Drew, welcome to the show.
Great, thank you, Ian. Thank you, Sandi, for having me. As you mentioned, I have a team of about 8 bankers across the state of Wisconsin covering companies of all ranges and sizes. And as one of the handful of largest banks in the world with operations in 35 countries, we do quite a bit of work with companies all across the world and a lot of the multinationals here in the state of Wisconsin. So thank you for having me. Looking forward to our conversation today.
Thanks, Drew. And maybe I don't know if you want to add any more, just give us a little thumbnail sketch of the kind of work that your team does with companies, especially in the trade arena.
Sure. As I mentioned, with offices everywhere, a lot of the companies that are headquartered here in the state are looking to Bank of America to help support their operations around the world. So we spend a lot of time working with them to navigate various markets, understand the dynamics of doing business in all these different countries. And I think for our team, the last 18 months, what we've seen companies work through has been unique, different, and challenges that most of our companies have never faced all at one time. So we've been very busy helping companies all across Wisconsin navigate the challenges of what the last 18 to 2 years have provided everybody.
Yeah, it's been busy and scary, hasn't it? And now, of course, we're getting a new challenge, which is inflation has climbed up and remains persistently high. Interest rates following the inflation rate up, of course, and that's causing the US dollar to appreciate on the back of those interest rate rises. So what are the signs in the banking industry of changes, if any, in corporate behavior or planning in response to those trends?
Yeah, absolutely. As you mentioned, inflation is actually, we started seeing it back in, I'd say, early 2021. We saw the combination of unprecedented demand and just supply issues. So we saw a lot of our corporate clients' inability to get components and their desire to pay up for the components that they could get so they could meet the orders. More recently, it's morphed even more so to the wage side as labor market continues to be extremely tight and challenging. So what started out as kind of a demand aspect and the supply issues, it's morphed into just overall cost pressures for our companies. So we've seen borrowing ramped up quite a bit, really across the board as companies are faced with higher costs, but also as they think about trying to get ahead of inventory issues. So more advanced purchasing on inventory, bringing purchases forward, trying to make sure they have the components on hand so they can meet the demand that they're seeing and the OEMs are experiencing. So we've seen, trouble continue. We've been seeing re-engineering where it's applicable for companies trying to use different products. And we've, of course, seen evaluations on suppliers, but that, of course, takes a lot longer. There's a lot more to it and not something that you can move quickly. So there's been a lot of activity in that space. And I'd say more recently, as you mentioned, the strength of the US dollar, we've seen companies take a look at, can we use this to invoice us in their local currency?
Sure.
Trying to take advantage of the fact that the dollar is so strong.
So, as you may know, Drew, I'm in the front lines of some of the supply chain issues in logistics and in handling imports and exports. And I have certainly seen, the increase in pricing and the difference in ordering and, customers saying, get me any space you can, and I'm going to over order and just to make sure I have the inventory. And what we're seeing now is a lot of customers with excess inventory, but yet still they have the wrong parts. So they have too much of one item and not enough of the right thing to make what they make and the right raw materials. And, that whole cycle of supply chain that was so disrupted. So, and all of that affecting inflation and pricing and everything else. So I worry about my customers and their, financial strength. And I certainly, appreciate trying to get inflation under control and interest rates. But, how I have my doubts in how quickly we'll see some benefits. It doesn't seem to be quickly changing behavior. Starting to see a little bit of change maybe on the consumer side. What are you seeing from the banking perspective and the corporate side?
Yeah, and you know what's interesting is we recently rolled out what we're calling the Bank of America Institute, which takes advantage of all the data we have from doing business with tens of millions of consumers across the country. So I can actually give you a little bit of a viewpoint on what we're seeing the consumer and how they're acting right now. And you mentioned a little bit of a shift. We are seeing through May, spending was still up pretty significantly year over year, 9%. But when you factor in inflation, it's really a real increase of about flat, if not negative, in terms of how people are spending and how much people are spending. But what we've seen is a pretty significant shift from durable goods, the things that everybody was buying during the pandemic, to services, and starting that change probably 2 or 3 months ago. And that historically is how you've seen inflation change over the course of time. And I think we'll start to see, and we've heard some anecdotal evidence from certain companies of maybe over ordering some durables, but in the overall impact of what that'll have on inflation, we don't think it's going to have much of a change. But I personally think we're seeing that the shift to services. But what we're seeing overall is the consumer and our corporates are starting this cycle of inflation from a very strong position. So corporate balance sheets are very strong. And on a consumer side, again, our Bank of America Institute data suggests that savings accounts have never been this high. They're much higher than where they were in 2019. So there's some room to absorb these added increases, at least for the short to medium term.
Really interesting. And then staying with the inflation, especially the consumer side of that, recently or earlier last week, President Biden announced his intention, at least, to remove some of the Trump era tariffs that were applied on China, maybe on steel as well, the Section 232 tariffs that were applied to steel. And he justifies this as an inflation fighting measure. Gary Hufbauer at the Institute for International Economics thinks that maybe if all of those tariffs were taken off, it would be a one-time reduction in inflation of about 1.3%. What kind of effect do you think that might have on the corporate world? And do you think with the shift towards services, is that really going to have a big impact?
Yeah, thanks, Ian. I mean, I don't know, and I haven't seen the details of specifically what a repeal could look like, but I will say that on the corporate side, what we saw when these tariffs were introduced several years ago now was a pretty quick action on the corporate side, especially the larger, more nimble companies immediately began to find ways to work through this, whether that was changing their supplier base to different markets, or in some cases, it was more of a one-time absorption into their margins, which I think has kind of worked through the system at this point. So, I wouldn't expect, personally, a huge impact one way or another on this. It feels like a lot of our businesses, this was the biggest challenge when you think back to 2018, 2019, was working through this. Now we've got probably 3 or 4 different challenges, probably of more importance than this one, that companies are battling at all at one time. So
this one is small in relation, right?
Yeah, exactly.
Yeah.
Well, I think it will be easy to justify not passing on any cost savings because you do have all these other challenges with fuel and other rising costs and challenges and so forth. So sadly, I don't think the consumer will realize the benefits from that one way or the other. But very interesting. Drew, it was a pleasure having you today. Some really, great, facts and information from the bank. That's super helpful on trying to understand all the various dynamics going on right now.
Great. Well, thank you for having me, and thanks for putting this on. You guys do a great job. Look forward to continuing to follow the series here. So thank you very much for including us.
Thanks, Drew. This has been Talking Trade with Drew Slocum from the Bank of America, and we look forward to seeing you in the next episode.